Investing in gold, like any asset, is not solely about understanding market trends, economic indicators, and supply-demand dynamics. While those factors are undoubtedly important, the often overlooked element of human psychology plays a crucial role, frequently making or breaking even the most well-researched investment strategies. Our emotions, cognitive biases, and ingrained behavioral patterns can significantly impact our investment decisions, often leading to costly mistakes that erode our capital and hinder our long-term financial goals. In fact, many experts argue that more portfolios are ruined by the insidious effects of poor investment psychology than by market crashes themselves. A market crash is a major economic event, and mindset can help to protect against it. Learning to recognize, understand, and ultimately manage your mindset is absolutely essential for protecting your capital, mitigating risk, and achieving lasting success in the gold market. Developing a strong investment mindset is worth the time and effort. Welcome back to the Gold Protocol. Today we're delving into this absolutely crucial topic of investor psychology, specifically focusing on gold as mindset, 3 psychological traps that cost investors $10,000 plus. We'll pull back the curtain and explore how seemingly harmless emotions, fear of buying at the top, panic selling during dips, and the ever-tempting shiny object syndrome can subtly sabotage your portfolio, costing you significant amounts of money over time. Drawing on the latest insights from a leading behavioral finance expert, we'll meticulously identify the 3 core cognitive biases that specifically target gold investors, making them particularly vulnerable to making poor choices. More importantly, we'll equip you with a practical and actionable mental protocol to neutralize these biases, empowering you to make more rational, data-driven decisions. As a special bonus, we will also share a simple yet powerful 5-minute daily gold meditation technique, adapted from practices used by Swiss vault managers to maintain a calm, rational, and objective mindset in the face of market volatility. Taking care of your mindset will translate to taking care of your wealth. It is prudent to take care of your mindset when investing and protecting your wealth. It is essential to learn to manage your investment mindset. The hidden costs of psychological traps, more than just dollars. Before we dive headfirst into the specific biases that can derail your gold investments, it's essential to understand the very real, tangible, and often devastating consequences of allowing your emotions to dictate your investment decisions. These costs extend far beyond mere monetary losses. Missed opportunities. Fear, hesitation, and analysis paralysis can prevent you from buying gold at attractive prices, particularly during periods of market uncertainty. By constantly second-guessing yourself and waiting for the perfect entry point, which rarely exists, you risk missing out on significant potential gains as the price continues to climb. Indecision can prevent you from creating wealth. Sometimes it is smart to make a calculated risk. Panic selling. Market downturns, particularly those fueled by negative news or economic anxieties, can trigger panic selling, leading you to sell your gold holdings at a loss, locking in those losses permanently and missing out on future rebounds. This emotional reaction is often driven by a short-sighted focus on immediate losses rather than a long-term perspective on gold's intrinsic value. You should avoid panic selling. Selling in the red can cut you off from the long-term game. Chasing trends. The allure of quick profits and the shiny object syndrome can lead you to chase after fleeting trends, speculative investments, and unproven assets, diverting your capital away from solid long-term gold holdings that offer stability and diversification. This often results in losses when those trends inevitably fade. Increased stress and anxiety. Letting emotions control your investments can lead to increased stress, anxiety, and sleepless nights, negatively impacting your overall well-being, your relationships, and your ability to make sound decisions in other areas of your life. Investing should not be something that causes stress in your life. Make sure to avoid added stress. Erosion of confidence. Repeatedly making poor investment decisions due to psychological biases can erode your confidence as an investor, leading you to become overly cautious, risk-averse, and ultimately preventing you from achieving your full financial potential. Trap number 1. Fear of buying at the top. Loss aversion bias. The perpetual waiting game. Loss aversion is a well-documented cognitive bias that describes our innate human tendency to feel the pain of a loss far more strongly and deeply than the pleasure of an equivalent gain. In the context of gold investing, this can manifest as a crippling fear of buying at the perceived top of the market. Investors tend to be cautious and hesitant, always waiting for a price dip that may never materialize. Symptoms: constantly hesitating to invest when gold prices are rising, obsessively worrying about an imminent price correction, and endlessly waiting for the perfect entry point that seems perpetually elusive. This often leads to a state of paralysis where you never actually invest. Consequences: missing out on potentially significant gains if the price continues to climb steadily upward, and potentially never investing in gold at all due to a perpetual state of fear and analysis paralysis. The longer you wait, the more opportunities you miss. Neutralization protocol. Shift your focus from short-term price fluctuations to gold's long-term value as a store of wealth and a hedge against economic uncertainty. Implement a disciplined dollar-cost averaging strategy to gradually build your gold holdings over time, regardless of the current price, smoothing out price volatility and reducing the emotional impact of market swings. Trap number 2. Panic selling. During dips, confirmation bias is the tendency to selectively seek out information that confirms our existing beliefs while actively ignoring or downplaying information that contradicts them. When gold prices experience a temporary decline, this bias can lead investors to selectively focus on negative news, pessimistic market commentary, and gloomy economic forecasts, reinforcing their existing fear and ultimately triggering panic selling. The goal is to protect yourself from dips, but selling everything will only further the loss. Symptoms: obsessively scouring news articles for negative commentary on gold, fixating on short-term price charts that highlight the recent decline and completely ignoring positive long-term indicators, favorable economic trends, or expert opinions that support a bullish outlook on gold. Consequences: selling your gold holdings at a loss during market downturns, permanently locking in those losses, missing out on future rebounds as the price recovers, and potentially abandoning your carefully considered long-term investment strategy in a moment of fear-driven impulsivity. Neutralization protocol. Actively challenge your negative thoughts and actively seek out diverse perspectives on the gold market. Deliberately expose yourself to information that contradicts your existing beliefs, forcing yourself to consider alternative viewpoints. Review your original investment thesis and remind yourself of the fundamental reasons why you initially invested in gold in the first place. Trap number 3. Shiny object syndrome. The availability heuristic is a cognitive bias that causes us to overestimate the importance and likelihood of information that is readily available to us or easily recalled from memory. In the context of gold investing, this can lead to shiny object syndrome, where investors are easily distracted by new, exciting, and often speculative investment opportunities, neglecting their core gold holdings in pursuit of quick and easy profits. Gold is a steady and long-term strategy, not a short-term cash grab. Symptoms: being easily swayed by the latest investment fads, chasing after speculative trends, and neglecting your core gold portfolio in favor of unproven assets with promises of rapid returns. Prioritize your core gold holdings as the foundation of your portfolio, and resist the urge to chase after every new investment opportunity that comes along. Before investing in anything new, carefully evaluate its risk profile, long-term potential, and alignment with your overall financial goals. It is essential to grow and protect your wealth, and mindset is the most valuable tool you have. To receive even more valuable tips on investor psychology, practical strategies for building a successful gold portfolio, and exclusive insights into the world of gold investing, subscribe to the Gold Protocol. Thanks for watching.